Bitcoin prices have seen significant turbulence recently, driven by a combination of speculative rumors and uncertain market conditions. A report from Matrixport stoked fears in the crypto community by suggesting the SEC is unlikely to approve a Bitcoin spot ETF soon. This report, pretty old news actually noting reluctance from Democrat SEC commissioners towards crypto, sparked a sharp Bitcoin price drop from $46,000 to $40,000. However, the market showed resilience as Bitcoin's price rebounded back towards $45,000. The recovery was short-lived, as prices plunged again within an hour to around $42,500 and then rebouncing it back again. From a speculation perspective of a trader, it's just the whales are dumping with no regards of the possible approval or Bitcoin spot ETF. Or they are the large institutions whom already knew the news in any way. Just like the recent action done by Mikhail Saylor and Cathie Woods. This swing is awkward, caused the anticipation of a possible SEC announcement today, Friday, regarding a Bitcoin spot ETF approval according to Fox News. First, I want to include you about the latest news of Fed's minutes talk, possibly shape the market in some ways for the next few months. So in his December speech, Federal Reserve Chair Jerome Powell indicated the Fed could cut interest rates up to 3 times in 2024. Contingent on inflation continuing to ease. However, Powell's comments have been somewhat misconstrued, as his primary message emphasized sustaining higher rates for longer. Mainstream coverage largely focused on Powell's mention of possible 2024 rate cuts. But in full context, Powell stressed the need to keep rates elevated this year and maintain restrictive policy to ensure inflation is durably under control. He noted rate cuts would only be appropriate once the Fed is confident inflation is on a sustained downward path to the 2% target. Federal Reserve officials have recently suggested the potential for at least 3 0.25 percentage point interest rate cuts in 2024, amounting to an estimated 0.75 percentage points of easing. Some projections, like JP Morgan's, forecast even more aggressive 150 basis points of cuts. This initially sparked market optimism around significant policy loosening. However, Fed Chair Jerome Powell cautioned on January 4 that rate cuts are not guaranteed, noting the Fed could maintain or even increase rates if economic conditions remain robust. This tempered the market's rate cut expectations. So viewing on a larger perspective, in the context of cryptocurrencies, the possible approval of a Bitcoin spot ETF could provide an accessible on-ramp for new crypto investors less familiar with cold storage wallets, like the elderly who aged above 40. They don't feel safe with having their money accessed on the World Wide Web. So the broader monetary environment shaped by Fed policy also heavily influences crypto market trajectory. Delayed or diminished rate cuts in 2024 could mute the potential crypto bull run. The crypto market outlook remains highly dependent on the pace and magnitude of Fed easing. If we take a closer look, here's the point of the minutes talk by Fed released just yesterday. Several members said it might be necessary to keep the funds rate at an elevated level if inflation doesn't cooperate, and others noted the potential for additional hikes depending on how conditions evolve. Though I personally believe the rate cuts will happen starting between the ending of Q2 and the starting of Q3. Continue with Bitwise survey report. A recent survey by Bitwise polling U.S. financial advisors revealed cautious expectations around the potential approval of a Bitcoin spot ETF in 2024. The survey included registered investment advisors, financial planners, institutional investors, and wirehouse representatives. Only 39% of surveyed advisors believe a Bitcoin spot ETF will be approved this year, a figure notably lower than some optimistic market projections. This contrasts with more positive sentiment in other financial circles. The advisors' skepticism likely stems from long-standing regulatory uncertainty surrounding crypto, particularly the SEC's historical reluctance to approve crypto financial products. The SEC's prudent approach appears to have shaped advisors' conservative outlook. While the Bitwise survey found subdued hopes for swift ETF approval, it highlights how regulatory clarity could catalyze broader adoption. The path to a Bitcoin ETF remains complex amid the SEC's methodical stance, but its eventual approval could increase accessible exposure to crypto for advisors and investors awaiting regulatory guidance. While advisors are cautious on near-term ETF approval, many believe it will eventually happen, just not in 2024. 22% expect approval in 2025 and 24% after 2025. This extended timeline highlights recognition of the complex regulatory dynamics at play. However, despite this, caution highlighted a strong interest among the advisors. Majority of them, which accounted to 88%, are interested in buying Bitcoin, said they would prefer to invest after ETF approval. This preference underscores the perceived importance of an ETF as a catalyst for broader adoption and investment in Bitcoin, particularly among traditional financial advisors. Bitcoin Spot ETF news may release anytime soon. Are you ready for the year of 2024? Thanks for watching, and I will see you on another video.